Crystal Faulkner with the CPA and Business Advisory Firm of Cooney, Faulkner and Stevens. We're here today with Joe Testa, Ohio's Tax Commissioner. And Joe, the General Tax Amnesty Program kicked off on May 1st. It runs until June 15th. I think it's a real win-win for the state and for the taxpayers. Maybe you can share some of the details.
Sure. As you know, Crystal, the idea of general tax amnesty is to get people to come forward who may have underreported or not reported in the past, and it gives them a bit of a break, of course, because of the reduction in interest and penalties, and helps both the state and local communities as well, because those dollars that actually come in then go right back to, part of it at least goes back to the local community for regular services and so on. So it's a good opportunity to come forward, bring things current, and then the idea is that in education, and then being able to move forward, because these people are, again, become current on their taxes, and they hopefully will continue to be so.
And certainly this could be a big deal, because the penalties and interest can oftentimes be as much as half of the tax. And so if you're in a situation where you can take advantage of this program, it clearly is the time to do it, because if the state audits you, or if they get some type of an assessment notice first, they can't take advantage of it, correct?
That's exactly right. Yes, if you have to be qualified, and the qualification means what you just said, that you can't have been audited, under audit, you could not have been assessed for that tax. So it's really coming forward with things that the state does not already know about.
And this covers most every tax other than the consumer use tax, which has its separate program. That would include income tax, individual, business, some school district taxes, sales taxes. So this is something that if this does apply to you, you should absolutely take action now, because on June 15th, the time has come and gone, correct? It
closes, yes, and then if you are subject to discovery from the state tax department through an audit, then you will pay significantly greater penalties and interest. So you don't want to do that. You want to take advantage of this. And you mentioned the local, and you mentioned school district income tax is part of it. Sales tax is part of it, because as you know, there's a local component in the county, at the county level, and for transit authorities, of course, so sales tax component in some parts of the state as well. So those dollars go back to the local community as well. So you're helping a local community at the same time.
And if people would like more information about the program, I know I've looked at the website. It's very thorough. What is the website for viewers to take a look?
It's ohiotaxamnesty.gov.
Just ohiotaxamnesty.gov.
Right.
Well, Joe,
you'll find out all the information that you need.
Thank you so much for this great information.
You're very welcome.
We're going to continue our conversation with Ohio's Tax Commissioner Joe Testa on WCPO.com/businesswise. So Joe, let's switch gears a little bit, because another big initiative I think that you're probably very involved with, and I know our governor of Ohio is the discussion about the income tax rate reduction. Maybe you can share some of those details.
Well, the governor this has been on his radar for years. I mean, the income tax in the state of Ohio, we are not competitive in that area. A lot of things have happened, as you know, in tax reform 2005, and then subsequently, and then some of the things that we have done during this administration certainly are more taxpayer friendly and so on, reducing rates and that kind of thing, eliminating the estate tax starting next year. I mean, you know those things. But one of the things that really still holds us back, in his view, is our income tax level, which tops out at 5.925% for the upper earners. So it's a non-competitive aspect of it. The governor would really like to do what he can. So that's part of his thinking here. And the other is
that's a rate reduction, correct?
That's a rate reduction, yes. We're talking about rate reduction. You have 9 brackets, and which is complicated. Something else I'd like to address one day. But for the time being, basically what he's thinking is doing something for all Ohioans. That means taking all 9 brackets down whatever we can. So that's one thing. On the other side of it is this great new opportunity that's facing Ohio, particularly the eastern part of the state that has not been very robust in its economy in recent years, and we have this phenomenal Utica shale under much of the eastern part of the state that is billions, and I've seen some estimates as much as $1 trillion in value. I mean, there's tremendous natural resources here in Ohio. And to some extent, we've known that. I mean, coal has always been there, and certain oil and gas has been there to an extent. But the oil and gas industry in Ohio has been relatively sleepy, basically, in the last century, 50, 60, 70 years. So with the development of the new technologies, which enables drillers to be able to go down 8 to 10,000, 12,000 feet, do this horizontal drilling. I mean, technology is phenomenal. This horizontal drilling and this fracturing kind of process, you've heard that term.
That's what they call fracking.
Fracking,
okay.
right. This fracturing kind of process creates fissures in the shale and enables it to draw the oil and gas back out. There's just tremendous opportunity here. So the governor looks at that and says, this is a one-way situation. These are resources that are under the ground in Ohio that are going to come out of the ground and go someplace. Why shouldn't all Ohioans benefit from it? So, and then we look at how do we stack up against other oil and gas states and our surrounding contiguous states and that kind of thing. Not all of them are all that active in oil and gas. Some are just active in gas, methane, dry gas. Some don't have oil at all, and all these different things. So you look at that and you say, look at these two things. These two things. One is the income tax is too high. You'll get this great opportunity, and our severance taxes, which is the main basic tax that's used for that structure, there are others in there too, is very, very low. I mean, very, very low. When you look at other states, we look at oil and gas producing states, we are extremely low. So we say, okay, let's address that. And address it in a way that we are still going to be on the low side. We don't want to be non-competitive. We don't want so we don't want to do that. So where does that fall? And I could give you the numbers and details if you'd like. But the general idea is let's be reasonable here and raise those rates somewhat.
Because many of those rates are going to be paid by companies who aren't currently in Ohio.
Currently in Ohio, yeah, they're
big companies.
Texas companies, yes. Oklahoma, all over the place, and a lot of international investors and those kinds of things. And so how can we leverage that to help all Ohioans? So what we have structured is that with the severance tax rates that we're projecting in our proposal, all of the additional revenue that comes in through that collection process is going to be used to go into an income tax reduction fund. And then when we reach certain thresholds, we will push those income tax rates down.
And you know what I personally like about this, given the fact that our practice, certainly we have many privately held companies, many of which are pass-through entities, smaller companies, family-owned businesses. They pay their business income taxes at the same rate as everyone else, whereas large corporations do not pay an income tax in the state. So to me, I think this is another wonderful opportunity to help privately held small businesses.
It's a good point. It's a really good point, yes. And with tax reform in '05, we moved to the CAT tax, which is the kind of the fundamental commercial tax for businesses, which is what most of those larger businesses will pay, small business too. But again, as you said, the business income, if you will, on a pass-through is like the personal rate. So no, the balance we think makes sense. And where is it going to go? The geological studies and all the experts, it is all over the place. So what we have done is we have taken a wide variety of studies from universities and from some in the industry, and tried to look at that and say, okay, what's kind of a conservative, reasonable projection here in terms of production, in terms of market value of the products, the liquid gas, the gas and the oil, and what could we possibly expect? And we're thinking that if it follows the path that was generally accepted at this point, we're talking about $500 million in 2016 going to the income tax reduction fund, about a 5% reduction across all brackets. And if it continues to grow, Crystal, it's going to help the governor be able to drive those income tax rates down much lower than they are today.